Welcome to Earnings Central. In this video, we'll break down ChargePoint Holdings' third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. Let's get started. Starting with top-line revenue, the original estimate for Q3 was $89.8 million. The company actually reported revenue of $99.6 million, surpassing expectations by 10.9%. However, this quarterly revenue marked a 9.7% decrease compared to the $110.3 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q3 was a loss of 17 cents. The company actually reported a loss of 18 cents, missing expectations by 1 cent. However, this result reflects a significant improvement of 25 cents per share compared to the 43-cent loss reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. The numbers tell an interesting story of strategic cost management. ChargePoint significantly reduced their cash consumption, bringing it down to $24 million. That's a 64% drop from earlier this year. It's a clear sign they're getting serious about controlling spending. Their gross margin remains steady at 26%, which might not sound exciting, but stability is actually good news in a challenging market. Even more impressive, they've managed to decrease operating expenses to $59 million, down from $66 million in the previous quarter, and a substantial drop from $81 million in the same quarter last year. The company also made progress on inventory management, reducing their inventory balance by $7 million. This isn't just about having fewer parts on hand. It's about freeing up working capital and improving their financial flexibility. And here's something that'll make investors smile. Their adjusted EBITDA loss continued to improve. They're down to a $29 million loss in this quarter, compared to $34 million last quarter and a whopping $97 million in the same quarter last year. That's a trend moving in the right direction. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The electric vehicle market continues to show robust growth. In the third quarter, EV sales in the U.S. hit a record, growing 11% year-over-year. ChargePoint sees this as a clear sign of the ongoing transition to electric transportation. One of the most exciting developments is their next-generation software platform. This isn't just an incremental update. It's a comprehensive solution that will allow customers to manage entire networks of chargers, corporate fleets of cars, trucks, and buses. It's a big leap forward in their software-first strategy. The company also underwent a significant sales team restructuring. They brought in a new chief revenue officer, David Weiss, who's been realigning the sales organization to drive growth. They've been clarifying roles, standardizing processes, and focusing on improving their partner program. Network reliability is another key focus. They've deployed an AI solution that allows drivers to report station issues more effectively. In just 10 weeks, they've been able to resolve nearly half of all reported issues across thousands of stations. That's a game changer for customer satisfaction. Looking ahead, ChargePoint is clear about their path to profitability. They're targeting positive non-GAAP adjusted EBITDA in a quarter of fiscal year 2026. This isn't just wishful thinking. They're backing it up with concrete steps like cost management, revenue growth strategies, and improvements in gross margins. Their manufacturing strategy is also evolving. They're shifting some manufacturing to Asia, which they expect will help improve hardware margins by mid-next year. And they're not just cutting costs. They're being strategic about where they invest and how they create value. One thing that really stands out is their confidence. Despite potential political uncertainties and challenges in the European market, they remain committed to their long-term vision. They believe electric vehicles are superior to internal combustion engines and are positioning themselves to be a key player in this transition. In conclusion, ChargePoint is showing signs of maturity. They're not just surviving in a challenging market, they're actively shaping their future. By managing costs, investing in technology, and staying focused on their core mission of enabling electric mobility, they're setting themselves up for potential success. That wraps up our recap of ChargePoint Holdings' third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.